Hi, this is problem 5-2A from your book, and it's also the one I worked in class. I just didn't get to quite all of it in class, so now I'm going to work the whole thing for you. I'm going to work it in parts, so I'll record about 5 transactions, then stop, upload it, record a few more transactions. That way it'll be broken up and easier to upload for me, and maybe if you don't want to watch the whole thing, you can watch the parts that are interesting to you. Alright, so problem 5-2A are sales transactions. So this is for a store, a merchandising organization, and we're going to do just the sales transactions. So the key thing to remember about sales transactions is when we make a sale, there's two things going on. There's the sale where we record the revenue and get the receivable or the cash in exchange for the sale. And there's the reduction of inventory and the recording of the inventory expense, which is cost of merchandise sold. So when we have a sale, there's two things going on. Then later on, if there's an account receivable, we're going to have to account for getting that cash in, and then if there's a discount, we have to account for that. Alright, so let's just get started right in on our first couple of transactions. First transaction occurred on March 2nd. Sold merchandise on account. So remember, on account means there's going to be an account receivable for us. To Equinox Company, $18,900, terms FOB destination. So that's the sales revenue right there, the $18,900. FOB destination, we're not paying for freight. There's nothing going on with freight here. 110 net 30. So just to remind you, that 1 means 1%. That's the amount of discount we will offer if they pay us within 10 days. And if they don't pay us within 10 days, then they just owe us net, the whole thing, at 30 days. The cost of merchandise sold is $13,300. So that's important because, as you know, we hope to get more from the sale than we paid for the stuff we sold. So typically you're going to have two numbers in a sales transaction, what you sold it for and what that merchandise cost. Alright, so let's just work that out real quickly. So the problem is to journalize all these transactions. So the journal being a chronological listing of all the transactions. As with all our journals, we're going to start out up at the top with date, account, and good old debit and credit. Alright, so the date for this first transaction is March 2nd. And the first thing we're going to record is the sale itself. Sale is a revenue account, so of course it's your credit. So the debit is what we're getting in from the customer, which is in this case an account receivable. And it's from Equinox. Remember, it's important to track each separate customer. You don't want to just lump all your accounts receivable into one large account as you're recording them. Okay, so accounts receivable, Equinox, then sales. Here's our revenue. Remember, revenue's on the right. So that's $18,900. Great. Debits equal credits. Very good. Make sure these are always equal. Now, you could have two credits that add up to the debit, but your total debits, your total credits for any one transaction need to be equal. So in addition to the sale, we're going to also have to take care of the inventory part, right? So we sold some of our inventory, so we need to reduce that. And that became an expense to us, cost of merchandise sold. So when merchandise leaves us, we record it on the day, so that's $3,300. And we have cost of merchandise sold and our merchandise inventory. And they told us that amount, $13,300. And we did that transaction. Alright, next transaction. Sold merchandise for $11,350 plus sales tax. We're going to scratch that out. To retail cash customers, the cost of merchandise sold was $7. So we got the same thing. We have some revenues in the form of sales coming in. We reduce our merchandise inventory and increase our expenses to the tune of $7,000. But instead of an account receivable, this is your cash customers. So that was 3,3. And so instead of account receivable, we have cash. And 11,350. And of course our sales, this is our revenue account right here, sales, 11,350. And we still have to do this, we sold some merchandise. So I'm going to start writing COMS, cost of merchandise sold, for COMS. And you can do that too, but just make sure you're not writing just merchandise. Because if you just write merchandise, I won't know, do you mean merchandise inventory or cost of merchandise sold? So abbreviate things in ways I can tell. In merch inventory, and we know that it was 7,000. Good. And with that transaction, we recorded our revenue, got our cash in, we recorded our expense, and reduced the asset inventory. Great, so that one's done. On March 4, we sold merchandise to Empire for $55.4, terms FOB shipping point, net end of month, so they don't even get a discount. Cost of merchandise sold, $33.2. Alright, so this should be pretty easy. In fact, it's going to be just like this one, except a different customer. So on 3.4, account receivable, Empire Company, sales, 55,400. And of course, same thing. We sold something, so we got to have a cost of merchandise sold, and we got to reduce our merchandise inventory, and they tell us that that's 33.2. Okay, great. We're done with that. What's next? On the 5th, we sold merchandise for $30,000, and we're going to ignore the sales tax, to retail customers who used MasterCard. The cost of merchandise sold was $19,400. So whenever you see credit cards like MasterCard or American Express, or it just says credit card, that's the same as cash to us as a store. Alright, so don't let that confuse you. When customers pay, it comes right out of their account, it goes right into ours. So when retail customers use a credit card, it's not us extending the credit, it's their bank. So we're going to treat that as cash. So that's going to be just like this one, cash and sales. That's on the 5th. And of course, we're going to have cost of merchandise sold and merch inventory. And that amount is 30,000, right? 30,000 is what the sale was. Cost of merchandise sold, 19.4. Okay, there you go. So hopefully you've got this down. Every time there's a sale, you have either an account receivable and a sale, or cash and a sale. And whether it's account receivable or cash sale, every sale is going to have cost of merchandise sold and in the inventory reduction. Alright, so let's look at the next thing. On the 12th, received check for amount due from Equinox for sale on March 2. Alright, well that's awesome. Let's look at this one a little bit more. So if you look at this, you'll see it's the 12th, and when we sold that stuff, it was for 110 net 30. So we need to calculate this 1% of $189.9. So that's pretty easy. That's $189. So this is March 12th. Although I'll go ahead and calculate this for you, right? Discount equals 18900, which was our amount of our original sale, times 0.01 equals $189. So that's the discount amount right there. So how much is Equinox actually going to send us, right? In other words, how much cash are we getting in? Well, that's 18,900 minus that 189 equals 18,711. All right, so that's the amount of cash we got in. All right, so now we know enough information to do our transaction. So obviously if we're getting cash in, that's got to be our debit, right? So cash, 18,711, right? And we know that this account receivable is what's getting paid off, so we know to decrease an account receivable, we have to credit it, right? So AR Equinox is, they owe us $18,900, right? So they're paying that off. You'll see there's a little bit of a difference here, right? Our credits do not equal our debits. Well, that's because of this discount. I need to debit that $189, and I'm going to call that account sales discounts. Yeah, 189, and now our debits equal our credits. All right, so we have to track these sales discounts separately. That's an important thing to remember, because when we did purchase discounts, we went ahead and subtracted those right from merchandise inventory. But when you're the seller and you're offering a sales discount, you track it separately on its own, because you want that information. All right, so I'm going to stop right here and have this be the end of part 1, and the next file will be part 2, and we'll just continue on with the transactions.